Hi, it's Kristian Harris of MonsterMortgage.ca. So Bank of Canada met today, and on their last 7 Bank of Canada meetings, they decreased the rate, and this was the first one that they did not. They paused and caught a lot of people by surprise. A lot of economists were expecting a rate cut, especially after they kind of held their conference and released their statement as to why. They cut, because what they basically said is, GDP is going to be down for Q2. The economy showing signs of slowing down. Uh, Businesses are slowing down. Household spending is down. Unemployment's up. All the reasons that you would normally decrease rates, but I guess the one thing is unpredictability and uncertainty. When I say unpredictability, we mean obviously south of the border and what's happening there with tariff talks. It's not even day to day, it can be hour to hour where things change, and there's a lot of uncertainty. And Bank of Canada said, we don't know if tariffs are going to be rolled back, but the effects are starting to kick in. When April 2nd kicked in, and that was the beginning, if you will, of the tariffs, it doesn't happen overnight, and we're still in April, but there's going to be a bit of a lag effect here. So, the Bank of Canada essentially said we most likely will be cutting rates, later this year. So it was a bit confusing for some economists as to why they didn't today, but I guess they can cut rates at any time. We've seen in the past they can cut rates even prior to the next meeting. So what does that mean? Obviously, the Bank of Canada's announcement today only affects variable rate clients. It does not affect fixed rate clients, that we said many times before. And the fixed rates are based off the Canadian bond market, and that can go up or down. Where they went up last week, and we saw fixed rates pop a bit. But it looks like the Bank of Canada will be reducing rates next year. So if you have a variable product, it didn't move today, but it might move next meeting. All indications are, based on what they released today, is that the economy is sluggish and we should expect rate decreases. But again, things can change by the hour south of the border depending on what DT says over there. So anyways, I know it can be confusing when you hear this in the news and what to do and what that means for my mortgage. So whether you're getting into the housing market and you want to know whether to go fixed or variable, or you have a renewal coming up and you want to look at your options, give our agents a call. They'll be happy to walk through the kind of the pros and cons of each one. Okay? Thank you.